I think picking a broker is like finding the person you're going to marry.
Even on a down day with disappointing news, there are some good stocks to be had. The bull is sick. The bull's in a coma. The bull's just fluttering its eyelids next week.
It's like Gary.
But it's got 2 years to get better.
Martha Stewart did get caught with her hands in the cookie jar.
We want to see Skilling and Kenley go to jail, and we want to see them do that same hurt walk that Fasto did yesterday.
That is the tragedy here, is that greed has caused people to lose their lives.
How bad is the market? If it were a movie, it would be called Honey, I Shrunk the Portfolio.
Tyco, where $90 billion of market capitalization is gone, and then we see Dennis Kozlowski, the chief executive officer, sailing around on his $25 million yacht. It's infuriating.
The telecom sector, it is so hot right now, but it's really that Wall Street was asleep at the switch. Wall Street, it's time to be on your best behavior. Shine your shoes, press your shirt, and convince us you really want us. We're tired of bad boys. We're looking to settle down.
Hilary Kramer is a financial editor for the AOL, and she joins us now with more on investing green. Hi, Hilary.
Hi, Robin. Good morning.
Good morning to you. So you have some information on being a capitalist with a conscience. Can you explain to me what is a socially responsible investing?
Yeah, socially responsible funds and investing include screening out for stocks that are in casinos, gaming, tobacco, firearms. What companies look for today, the investment firms, is to try to screen out and make sure that all of their investments are really trying to enhance the environment or at least not hurt the environment.
Yeah, but at what cost then to the investor? I mean, you may want to invest green, but are you going to lose some of your own green?
The reality is it's not the case. Everyone thinks that if you go into socially responsible funds or into investments that are green, you won't have the returns. But the returns are there, and you can make money if you try to go environmentally friendly.
But you also note that a few stocks you feel are going to be vulnerable to global warming trends. And I noticed that almost all of them deal with public travel. Why?
Well, because when it comes to global warming, it's about volatility in the weather, in the temperature. We don't know what's going to happen. Today, we all say we don't know what the weather will be tomorrow. And the reason is because of global warming to some extent or another. So companies are vulnerable to that.
The housing market in 2005 was red hot. The big question, is it cooling off in 2006? And what's the best advice on how to manage the market? Earlier, I spoke with Hilary Kramer, AOL financial editor, for insight. What set the stage in 2005, do you think, for this explosion in real estate and the interest that people had in it?
Well, what we had was in June 2004, rates dropped to 1%. That's what banks had to pay to borrow money. And that spurred on one of the greatest real estate booms in history in terms of people being able to borrow at such a low cost.
That also raises, though, a real concern for those people who've borrowed more than what they're ultimately going to be able to afford to pay. Are they in trouble? Let's say, for example, you have one of those adjustable rate mortgages. It's really low now, but you may have to refinance in the future?
Yes. If you have an adjustable rate mortgage, now is the time to consider locking in a 30-year mortgage. Go fixed at this point because rates are still so low, and the 30-year fixed rate mortgage is very low. So it may be a problem. Those who have adjustable rate mortgages, as we see rates start to rise in 2006, they're going to open that envelope each month and have a big surprise.
If someone says to you, I have an interest-only mortgage and I don't pay on the principal, do you sort of like hold your breath and and sort of gasp a bit? I mean, it really is a tough place to be, isn't it, right now?
Yes, it is. 53% of mortgages in 2005 were interest-only mortgages, and those people, those individuals, have taken a bet that the value of their home is going to increase, astronomically, because when you have interest-only, you can really get caught down the road.
You believe we have a bubble and it could burst. Is that right?
Yes, but it's okay. It's fine for those who have made an investment, a solid investment in a home. It's the best investment, the best money one can ever spend. It's dangerous bubble for those that decided to speculate.
Let's look now to 2006 and what people should do. I like this tip. You say buy within your means. You can still buy, but just be very careful about how much you decide to spend.
Yes. As a matter of fact, it's a perfect time to buy because there's more inventory on the market. And those homes that are for sale right now, many of them have been upgraded, renovated. $850 billion was taken out of the market in refinancing, and so much of that went into renovations.
Buy value. How do you know what value is in a market like this? How do you know the price isn't overinflated?
Well, always look at the neighborhoods, look at the school system. If there's a good school system, you know you're always going to have a house that's worth, a considerable amount of money, more than those where there isn't a fine school system there. Always look for location, 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 and you can't go wrong.
Hillary, you say we'll go to war with Iraq. You've loved the defense stocks for about a year now. You've been right. What stock do you like now?
Raytheon. Raytheon's about $17 billion in sales. It's Tomahawk missiles, it's Patriot missiles, it's intelligence, it's reconnaissance, and now it's also Homeland Security. It's all the bomb detection devices that we see in the airports. It's poison agents, chemical agent detection, and Raytheon is really about technology, and that's how we're going to fight this war. Technology and communication.
Jonathan, shaking your head there.
Yeah, I don't know. Sometimes I think, the story sounds a lot better than the stock chart looks. I mean, I don't know. Hillary,
but the story is about $350 billion defense budget.
I know
the Pentagon, the biggest consumer in the world. And we are probably going to occupy Iraq for years. And the war on terrorism isn't going to go away just by taking Saddam Hussein out.
I know the story's good.
The problem, what Martha Stewart did, she owned 4,000 shares of Imclone, the biotechnology company. She sold the shares for a proceeds of $227,000. Had she sold the next day after the FDA announcement came out, so Martha would have lost $43,000. So all of this suffering because of the $43,000. And what's a shame here, again, are the stockholders, the shareholders of Martha Stewart Living Omni Media, have lost 75% of the value in their company.
How much is that total in terms of equity loss in that company?
$800 million has been lost. In March 18th, the shares were $20.93, and now the shares are hovering at $8.
Oh. The Israeli stock market's been plummeting. Inflation's a big problem in Israel right now. The economy is in serious disarray. How much do Israelis peg that to the ongoing hostilities with the Palestinians?
Oh, it's a direct correlation. But at the same time, I was at the Knesset today, and I met with a parliamentary member who runs the Finance Committee. And when I asked him basically that question about the Israelis and what are you trying to do to help the Israelis in the economy, his answer was, we have to fight terrorism first. We have to root that out, and business will take care of itself. I also met with business leaders. I met with the president of one of the largest manufacturing companies in Israel up in the Golan Heights on the Syrian border. And he said the same. It's more important that my children's lives aren't at stake. Social Security is off the table. The Republicans, they don't want to talk about it. The Democrats, they want to bring it up because it's an issue where they can prove that if we had, in these past 2 years, had privatized Social Security, then there would be losses like we have in the Dow, 24%. We have the NASDAQ down 73%. Even our S&P 500 is down 40%. So we're going to see the issue. It's going to keep getting dragged out of the closet, but it is dead right now.
Thank you, Tyler. That's right. Besides being the most well-known sports brand in the world, Nike's also one of the best-performing stocks this year. But there may be some red flags in Nike's future. For the first time ever, Nike revealed its endorsement commitments in its quarterly statement to the SEC. And why is this important? The numbers had changed so much that the SEC requires them to disclose those figures before the end of the year. The company's endorsement commitments grew by almost $200 million between May and November of 2003. Nike's endorsement deals are now totaling $1.6 billion. This meteoric rise in the company's endorsements are due to those high-dollar contracts, including LeBron James's $90 million deal, NBA rookie Carmelo Anthony's $18 million contract, and, of course, we can't forget Nike's highest-paid athlete, Tiger Woods. His last deal cost the company $100 million. They're all big names in sports, but also costly bets for Nike. Bottom line, the endorsements are continuing, and Nike will likely add athletes to the payroll as the Olympics in Athens are only a few months away. And the games always produce new stars. So although Nike's profits are growing at a healthy clip, there's no guarantee that the numbers will keep pace with the growing endorsement commitments that Nike has. Tyler?